All right, let's dive in. Today, we're going to pull back the curtain on what some traders call the market's secret language, smart money concepts, or SMC for short. We're going to break it all down, step by step, so you can start looking at the charts in a whole new way. You ever look at a chart and just get that feeling that you're missing something? Like there's a bigger game being played just out of sight? Well, that's exactly what we're talking about today. We're going to unlock the playbook of the biggest players, the ones who actually move prices. So here's our game plan. First, we'll figure out who this smart money actually is. Then we'll talk about the one thing they're always hunting for, liquidity. After that, we'll learn how to spot their footprints, how to read the market's story, and then we'll put it all together into a simple strategy you can look for. Okay, first things first. What in the world is smart money? The easiest way to think about them is as the whales of the financial ocean. Seriously, their every move creates the waves that the rest of us just ride. Yeah, so smart money isn't some single genius trader. Nope, it's the combined muscle of the big guys. We're talking central banks, huge investment funds, you name it. Their orders are so massive that they don't just participate in the market. They basically are the market. Right, so we're definitely not talking about your average day trader here. We're talking about massive institutions. But here's the key. Because their orders are so gigantic, they can't actually hide what they're doing. They leave clues, or what we call footprints, all over the price chart. And that is what smart money concepts is all about. It's not some complicated indicator, it's a way of reading pure price action, to find those footprints, to figure out where the big institutions are getting in and getting out. It's like our decoder ring for the market. Okay, so if the big banks are the whales, what do they eat? What's the fuel for these huge market moves? Well, the answer is probably the single most important concept in trading, liquidity. So what is liquidity? Simply put, it's just a big pile of orders waiting to be filled. I mean, think about it. Where do most retail traders put their stop-loss orders? Right above a recent high or right below a recent low? All those stops sitting there, that's a giant pool of liquidity. Now, why does this matter so much to the big guys? Well, imagine you're a bank and you need to buy $1 billion worth of something. You can't just click buy. The price would shoot up before you were even halfway done, and you'd get a terrible price. So instead, you have to find a giant pool of people who are selling. You hunt for that liquidity to fill your orders without tipping your hand. And this liquidity basically comes in two flavors. You've got buy-side liquidity, which is all the orders sitting above recent highs. Think of them as the stop losses for people who are shorting. And then you have sell-side liquidity, which is all the orders below recent lows, the stop losses for people who are long. Smart money is always targeting one or the other. Okay, so we know smart money is on the hunt for liquidity, but how do we actually see where they've made their move? This is where we learn to spot their footprints, which in the world of SMC are called order blocks. An order block is basically the smoking gun. It's the evidence left behind on the chart. It's that last little candle right before a huge explosive move in price. When you see one, it's a massive clue that says, hey, a big player was active right here. Okay, look at this chart. This is a perfect example of a bullish order block. See that last down candle just before that massive push to the upside? Now, look what happens later. Price comes all the way back down to that exact zone, touches it, and then, boom, takes off again. That's a classic signature move. So finding the footprints is great, but we also have to understand the story the market is telling us. We need to know if the current trend is likely to continue or if the whole plot is about to change. Now, this is a really, really important difference. A break of structure, or boss, just means the trend is doing its thing. An uptrend makes a new higher high, no big deal. But a change of character, or CHOCH, well, that's the first major warning sign that the entire trend might be about to reverse. It's when the market's story starts to change. Let's look at this chart to see it in action. The market was clearly heading down, right? Making lower lows, lower highs. But then, right here, it pushes up and breaks above the last significant high. That's not a continuation. That's a change of character. The market is literally telling us, hey, the sellers might be running out of steam here. All right, theory time is over. How do we actually put all these pieces together and use them? Let's walk through a really simple, practical strategy called the ICT Silver Bullet. Now, what's so cool about this is that it's based on time. You don't have to be glued to your screen 24/7. You just focus on these very specific 1-hour windows during the day when the big institutions are known to be most active. It gives you a massive edge. So here's the 5-step playbook. It's really simple. Step 1, you only look at the chart during one of those time windows. Step 2, you find the closest pool of liquidity, a recent high or low. Step 3, you wait for the price to run up and grab that liquidity. Step 4, and this is your confirmation, you look for that change of character. And finally, step 5, you look for your entry as price pulls back into an area like an order block. And look at this. This chart shows that magic moment. You see price dip down, sweeping that sell-side liquidity just below the old low. That's step 3. Then, almost instantly, it reverses and breaks structure to the upside, giving us that beautiful change of character. I mean, that is the A+ setup right there. Okay, so let's do a super quick recap. Smart money concepts are how we track the big players. Liquidity is the fuel they're constantly hunting for. Order blocks are the footprints they leave behind for us to find. A change of character is our big signal that the trend might be changing. And finally, simple strategies can help us pinpoint exactly when and where to look for these setups. So I'll leave you with this question. After seeing how these institutions might be engineering these moves to hunt for liquidity, does the market really seem all that random anymore? Or can you maybe start to see the story that it's trying to tell you? Thanks for tuning in.